Kevin Kinsella, in a recent interview, you said we are in one of the biggest tech bubbles you've ever seen, but you're talking about non-public companies, these unicorns, right?
That's right. I think the valuations of those companies have become, so outlandish, given the businesses that they have, that I don't think it's sustainable. But you're right, it's private capital is backing them. Succeeding even venture capital, you have private equity funds and hedge funds coming into them because they don't have alternative, interesting investments to make.
But is that a good reason to invest in one of these super high valuation companies? Because a lot of these people have seen this movie before. We have seen it in 2000 with the explosion, the popping of the internet bubble.
Yeah. Well, if you can time momentum and you can get in and get out at the right time, then God bless. But if you can't do it, you may wind up in the bottom of a pit. So I think it's highly speculative.
So how easy is it to get out of these companies? And what ultimately pops this particular bubble? Is it higher rates? Is it a failed IPO?
Yeah, well, that's the problem about getting out of them because they're private. So you can't just run down to your broker and say, sell my position. You have to find another buyer for it, and that could take a lot of time. So I think what pops the bubble is probably a couple things, and it may even be happening now. So China devaluing the yuan, I think, is a serious problem that hasn't worked its way through the markets yet. We saw a little bit of that in the last few days, but I think that's got a lot to go on it because they're such a major player and dominant player in world finance. Then I think as interest rates continue to tick up, all the money that has been completely uninterested in zero interest rates now will start to say, well, geez, maybe we should ease up a little bit on the equities and go into fixed income because we're going to get a fixed rate. And there really aren't times where you start seeing interest rates ticking up and then they start to back off. They always almost continue up, and therefore if you're going to head in that direction, you need to make plans. And if you place your bets, I think the equity markets will suffer.
Is this a less destructive bubble because the people who might ultimately get hurt are wealthy investors? It's not people losing their homes like in the housing bubble or people losing their 401ks like in the tech bubble?
Depends where you are on the vast bucket brigade of money. I think ultimately we're all connected in a sort of an interesting way. So if you're an institutional investor, you're managing money for a pension fund, let's say, and the beneficiaries of the pension fund are people who put their life savings into the pension. So I don't think people lose houses over this, but if you're taking a huge bath at a private equity firm or a venture capital fund, and you're managing money, and ultimately it's the it's the private individuals who work their lives and put money into pension funds, and that'll trickle down to them, but maybe not as in a dramatic fashion as happened when the financial crisis occurred in '08.
And your firm Avalon Ventures has done very well investing in a lot of biotech companies. Where are you seeing value in the market right now? Because not too long ago, Fed Chief Janet Yellen said that it's biotech that's overvalued and people should watch out for that.
Well, the interesting thing, it depends whether if you compare consumer versus biotech. If you have a product that's going to cure cancer or Alzheimer's disease or ALS or something, that's a real market. You don't have to worry about that. You take technical risk. If you're successful, the sky's the limit. However, if you're betting on an app, for example, that people are going to flock to it in droves, that to me is consumer bets are highly risky compared to bets in biotech.
So when you talk about the winners from this particular bubble.
Right.
Remember the last bubble? We did have some winners, whether it be Amazon or Google or Yahoo. These major tech companies, they hung around through the bubble, they survived. Who do you think the survivors are going to be this time around? Will it be Uber or will it be Lyft? Who's it going to be?
Well, I don't want to pick names, but I mean, it'll be companies that have real businesses, where if you are not subsidizing through your balance sheet, the drivers of your company or the workers or whoever, and you actually have a real business that makes money standing on its own, then that will continue to survive. It's the pretend Potemkin villages where you've created the image of having a profitable business, and it really isn't when you dig down. Those are the ones that are going to, the ones that have profitable businesses are going to survive, not the other ones.
All right, well, thanks a lot, Kevin.
Great. Thanks, Craig.
Thank you for watching The Street.